What up traders, what up investors, Ken here from the Dyslexic Investor, and today we're going to be talking about oil, and oil tankers. First of all, we're looking at a chart here at /CL, and this is the crude oil's futures market. As you can see today, we are up a tad over 20% here. This is just right before 1 p.m. Eastern Standard Time. Basically, this is looking like it's trying to break this overall downward trend that we've had basically since the break in oil at the beginning of the year. Has just been kind of on a downturn. Looked like it was going to try to pop, make lower, but then the overall pandemic started and it just came crashing, skipping down, huge gaps, and just falling out of the sky, in lack of a better words. Again, with the overall glut in the overall economy, low demand for this supply. No one's really driving to work. There's no one flying airplanes. There's not much transportation going on. The economy is really just stuck at a halt. With the next coming weeks potentially slowly opening up the economy in different various phases. Oil is trying to already price this in already, and you can kind of see basically a double bottom here potentially, or short-term double bottom, and trying to kick higher. Of course, so we're looking at the daily chart. So the 5 and the 8 exponential moving averages are the 5 has already crossed into the 21. Not too concerned about that. I want the 8 to cross into the 21, and then also have the ticker close above the 21, which is the yellow line as well, indicating a trend change or a potential effort to get the momentum going to the upward right hand side of the chart. So oil has been in a complete headache for sure, due to the overall pandemic, without a doubt. This is a report I'll link in the bottom description, as like how much oil prices will be in 2020 and 2021, and they're also forecasted to 2050, which I don't know how they do that. But anyways, basically the key takeaway is that they're guessing, again, these are guessing and projections, that oil prices will average around $23 a barrel in the second quarter of 2020. But then it'll increase to around $30 a barrel for the second half of the year. And the average for the overall year will be $33 a barrel for 2020. That is down basically nearly 50%. That's from $64 a barrel just late last year, or just the whole of 2019. And then prices will rise back to around $46 a barrel in 2021. Again, these are just projections and so forth. For the demand for oil, since the onslaught of the pandemic, it's just been completely slow. All the projections haven't not really been able to map this, because nothing has really happened in this day and age at a large scale of what has closed every economy around the world and limited supply. And then you have people at OPEC and Russia and the Middle East price gouging and trying to pump more oil into the system and dropping the prices even more to try to hurt our companies here in the United States. And it's a huge tug of war, in the sense of getting that price of oil to a level that anyone can make a dollar, or not having to close the front doors for their business. Alright, so with the overall oil prices that we're having currently, let's go ahead and just throw up the chart again. So again, kind of give you a bit larger perspective, or larger time frame of how oil has looked like. So again, this is the futures. This is a daily chart. We are looking at a daily. This is the last 20 years of the price of oil. So you kind of see it zigged and zagged around $50. Let's just call it, lack of a better words. We've seen it up basically in the early let's see here. Let me give you a better perspective. We'd do a weekly 20 years. There we go. So basically, just the last, I don't know, since 15, it's been around $50 a barrel of oil. And then again, we have seen that high cost barrel of oil basically right before the financial crash, which was crazy. I remember looking at those. Then looking at this again, this is a weekly chart. This is really trying to push higher. It's trying to push right past the parabolic SAR little purple dots, and the momentum has slightly switched here, went from red to yellow, which is a great sign. The RSI is pointing up. The only thing that we kind of need to see is the Chaikin money flow come back a little bit to kind of give you some bit of an indication here. This is somewhat similar to what happened potentially here. Again, this was a different circumstance of what happened in 15, but that being said, once it can get above 21, we wanted to kind of keep it stay above 21 for potential push higher. As you can see here, the moving averages kind of came up and then kind of barely just stayed level with it and never continued pushing higher and then going lower. So this is what we need to look out for. It can break through it and the moving averages can go through it as well, but if the moving averages continue not to go through it and just kind of stagnate and level off, that could be another decline in oil. So just be super mindful and careful of that when you're looking at these. Again, we're nowhere near the 21 on the weekly, but we are trying to make a base here. So when we go back to the daily chart here, of course we're through the 21, looking for ongoing strength, potentially going here. The Chaikin money flow on the daily indicator I usually don't like to follow. The RSI is trying to print higher here. Momentum is still yellow, trying to go to the light teal blue. Again, once the 8 crosses through the 21, that could be a potential sign for ongoing trend change. Again, anything can happen in this world. I don't have a crystal ball to be able to tell you where oil is going to go. I'm just indicating that it is moving in a positive direction for the the bullish side. If you're a bear, you have to start looking at a potential move into looking if you want to short it. They're going to again have some overhead resistance around 27-ish. Again, it is above the 21. If it closes above the 21 and the moving averages again cross through it, that is a very positive sign. So then we're going to look at some oil tankers. Yes, I got so much flack for this because I said I was shorting NAT. And the comments that I got were absolutely crazy. You don't know anything about oil. What are you doing? Da, da, da. And I tried to explain very calmly and without being a troll of saying, hey, this is a momentum play I'm trading. I am not trading the underlying fundamentals of the oil industry. So the Abmore Shipping Corporation, or ASC, basically down a little over 11% here. We can look at the chart here in a second. Again, this is a huge freight company that does oil storage. They did say that the quarter was good, but even though the stock went down, it didn't fully represent the full quarter of the overall decline, saying that next quarter will be a nice chunk of change, and estimating higher prices in the sense of the cost of storage, the average daily rate. You probably heard the interview with the guy from Jim Cramer from NAT saying they are charging this on average $72,000 a day for 30 days or 50 days or 70 days of storage, and it only costs them $8,000 a day per ship for their expenses, which is a pretty nice profit margin, right? But the thing is what this article does great, and I'll link it down below, it discusses that the overall shipping industry is not the most compelling to invest in. It's more like a trading vehicle because it's very cyclical, so it kind of goes in cycles. We can look here on the chart and then kind of underline some things for you there. So let's go ahead. We can look at ASC, and then we look at NAT. So down nearly 11% today due to earnings. It did have a positive growth and projecting out more a greater quarter next one coming up. Again, this has had a huge pop in the last coming weeks, basically going from nearly $4.90 up to nearly $8, so nearly doubling in price in just about a week's time, 2 weeks time, and then now kind of selling off and coming back down what we consider like a fair market value. That being said, it could be go further decline if it closes below the 21 here, and then the 5 and 8 are crossing into the 21. This could continue going down, so this would be something on my radar to watch. That being said, I am still short. Again, this is my opinion. NAT, I'm still short NAT with a huge run up, basically around the same time, with the inverse of oil going down, and then the lack of all the people who have no room to store it, or it's not worth to sell the oil because it's just cheaper to store it until the price goes up and they can unload it. But the thing is that's going to create another glut. There's just so much inventory right now of oil. There's no one really pumping it, so there's so much oil in these the ships around all these different bays in the oceans, and then there's also just dry dock storage of oil, and they're gonna have to slowly get rid of that over time. Yes, I can think that this could come down to the 21 here, around $5 ish, give or take, and maybe get a potential bounce. But earnings are coming up here, it looks like on the 18th. They're saying that they're raising the dividend. But my overall consensus still is that this stock will come back down to $4 or less due to the fact of the next couple months, because this momentum right here was all driven by the pandemic that we had. So once this pandemic kind of gets behind us for the most part, and the economy starts opening up, and people are seeing more positivity in the sense of all the things that are coming back. Not saying everything's going to come back full bore, maybe even 30, 40, 50% of what the capacity was. This will still see, I think, a decline in its stock price due to the momentum of the positivities of oil going higher and so forth, and more of the market getting out of it. That being said, you can go ahead and write in the description and say how, or the comment section, how stupid or dumb I am. I have money in this, so that's my opinion on it, and I'm allowed to have that, my opinion on that. So that being said, to kind of give you a little bit more data on this, so this kind of topped here on 428, and it had a run up basically from 421, the date of basically April 21 to April 28, quite fast, again gapping up quite a bit, so we can tell you exactly how much. It jumped about 80% or $4 in about a week, and for me that just tells me it's kind of a people are just doing the FOMO. So this is why my initial statement in my video saying I think this is just momentum play, on the sense of people are just being the fear of missing out and want to get a quick double or something like that. A lot of people bought here. You can see these huge gaps up, like a gap up here, and then a huge push higher with a huge sell-off that one day once it hit $9, and now kind of slowly grinding lower potentially. It's kind of indicating that this was kind of a short squeeze of people, just a fear of missing out, people getting out of their positions and so forth, because volume was through the roof. To go here on my deviation chart here, on the weekly chart, with this breaking out above the 3 deviation like it has, it normally comes back down to, I'm guessing, again, this is just my predictions, around $5, potentially down to $4 for a particular bounce higher probably, but then potentially going back down and slowly grinding lower. So this is because you can kind of see on how this has played out. Like, again, NAT used to be $56, and it just, you can kind of see the really high back and to and fro's here of just trading lower, trading higher, trading lower. It has a huge pop and then comes back to the mean, has a huge pop, comes back to the mean, has a huge pop, then comes back to the middle, has a huge pop and comes back to the middle. So my overall bets have been placed, and I'm guessing it's going to come to at least $4 or lower in the next coming months. So that is my initial price target on that. So to kind of compare that to what I'm seeing here, so again, we said that it had a huge pop on 421. Guess what happened also on 421? Oil hit a low on 421. All right, so this is completely correlated to the price of oil again, because if oil prices don't go higher, of course the shipping companies are going to make more money. And I think the FOMO of missing out and trying to get in at a very cheap price for a company like that is kind of going to run its course, and that trend is going to fade. Again, that's my opinion. Go pound sand if you want. So then with the 21st and then the 28th as well was also another potential low. Didn't break the full low, but it was pretty low compared to the relatively the other couple days. Again, just to give you a quick snapshot and takeaways, looking for oil to continue to print higher with the 8 exponential moving average breaking into the 21 for a nice little kick higher. On the monthly chart, it's still not, it's trying to go higher. The momentum's curling up. RSI is trying to curl up here as well. But the Chaikin money flow has not curled up yet. The monthly chart's going to move much slower than anything else, but we'll see once the next 3 to 5, 6 weeks on how the oil markets react to it with the higher prices, and once everyone starts getting back to work and things like that. So again, guys, thank you so much for watching. Don't forget to like and subscribe, and I'll have a link in the description if you want to join our Discord chat. All right, guys, take it easy. This is Ken from the Dyslexic Investor. Peace.